Is SAP a good stock and investment option for investors? Today, we're going to be talking about that. SAP is an information technology giant that is actually headquartered in Germany. It's a business that operates as an enterprise application software company worldwide. And the company operates through three main segments: applications, technology, and support, Qualtrics, and its services. As mentioned, it was founded back in 1972 and is headquartered in World, but also through some of the other major, um, from a stock perspective, not only it's available as a stock option through German stock exchange, but also available through New York Stock Exchange with ticker symbol SAP. It does pay a dividend, which is not common. A lot of the information technology businesses do not pay a dividend, but here we are seeing some dividend payments from this business for many years. And currently they have a dividend yield, which is one of the highest level that they've had in the past 5 years, currently sitting at 1.89%. The last time that SAP increased its dividend goes back to 2021, that they increased their dividend by 5%. The last trading price for SAP is currently at $79.47, and it was down by 2.3% on the last trading day. From a market size perspective, SAP has a market cap of $91.5 billion, making it a large cap size business. It's worthwhile mentioning that from a dividend payout perspective, they are looking at a payout ratio of 33% at this time, but their forward payout ratio is even much lower at only 11%, giving them a ton of room to continue to pay and increase their dividends. And in fact, speaking of their dividend payments, they have a strong track record of that. SAP has been paying its dividends for the past 24 years without any reduction, and in 12 years, in the last immediate 12 years of those, they have increased, in fact, their dividend year after year. So they have a long history of dividend increase over that time period. It's worthwhile mentioning over the past 5 years, they increased their dividend on average by 9% per year, and in the past 20 years, they've increased it by 14% per year, suggesting fast and very fast dividend growth. It does pay its dividend, though, on an annual basis. So if you are looking for a dividend paying stock with more frequent dividend payments, SAP is not the one. It does currently pay its dividend annually in the month of May. And currently their annual payout is at $1.50. You notice here how they've paid their dividend over the past 10 years. It was paid in June of 2012 and 2013, and since then it's been paid in the month of May. Exceptions was also in 2020, where they paid it by in the month of June. And you notice how nicely they've increased their dividend amounts. In May of 2022, though, their total dividend amount was actually a drop going to $1.50. It's of course worthwhile mentioning. Sometimes it's also dependent on the currency. Although their dividend amount might have gone up, but because of their currency exchange, it might have translated into a smaller amount in terms of the payment. From a timeliness perspective, if you look at it, there are two signs that point out to potentially the stock being undervalued. The first one, in this case, more obviously, is their dividend yield, which is way higher than their 5-year average of only about 1.03%. Their current dividend yield of 1.89 is about 83% higher than their 5-year average. That's one point that points out to us that potentially the stock could be undervalued. The other aspect is looking at the forward price to earnings ratio. It's a multiple that currently is sitting at 14.3, which is well below their own 5-year average of 21.5. On top of that, when you compare this to forward price to earnings ratio for the information technology sector, it is still lower than that. And lastly, even their trading price, which was at $79.47, in fact, hit the lowest price that the stock has hit in the past 1 year. All of which point out that this could be an interesting time for investors to take a closer look into SAP and potentially add it to their watch list if they think that could be an option for them to add to their positions. We are going to be taking a look at a number of additional financial metrics here to assess the stock better from its fundamental perspective. The first one being earnings per share. Ideally, we'd like to see a business that continues to grow its earnings year after year. That's one way for us to assess the business that is constantly growing, not only just in terms of their revenue, but also from an earnings perspective, profitability perspective. We are seeing that upward trend for the most part all the way until 2021. But if you look at it, the last 12 months, they are showing some signs of slowing down. And in the next 12 months, even more so, with an earnings per share of $5.24 in the next 12 months estimated. is definitely lower than that of the 2020 and 2021, but higher than any of the past 8 years prior to that. It could be a little bit of red flag, but we're going to take a look at a number of additional pieces to make a better informed decision. While the earnings per share is showing some signs of, slowing down and negative kind of move in the sense of slowing down and having their earnings per share declining. As for the total sales, you are seeing that nice upward trend with their total sales or revenue growing to 27.8 in 2021 and the last 12 months showing $29.4 billion. Next, we're going to take a look at return on equity, which measures how many dollars of profit a company earns for every dollar of shareholders invested. For most companies, we ideally would like to see this threshold at least 10%, and they've hit that threshold in all of the past 10 years. In the last 12 months, hitting exactly that 10%. Next, we're going to look at return on invested capital, which is actually a division of a firm's profits by the money that both equity and debt holders have given to company to gauge their management's capital allocation skills. Ideally, we'd like to see at least 8% for return on invested capital, and the business has been able to hit that threshold in all of the past 10 years. Next, we're going to be taking a look at operating margin, which is a measure of profitability that divides operating income by their total sales, and the higher, more stable operating margins can be a sign of an advantaged business. Here, ideally, we'd like to see at least 12% for the business, and we are seeing that double digit upwards closer to that 20 to 30% range in all of the past 10 years as well. Though it's worthwhile mentioning, as you notice, the operating margin is starting to get tighter, but still is definitely well above the ideal threshold that we'd like to see, and it's a positive sign. Next, we're going to be taking a look at some of our assessments that we have based on our premium subscription access to Seeking Alpha, based on our partnership with Seeking Alpha. If that's something that interests you, you are welcome to give that a try. We have a discounted promotional membership to Seeking Alpha Premium through a link provided in the description of the video. Check that out, and you can get your hands on this access at a discounted rate. It does give you access to wealth of knowledge and analysis and stock news. On top of that, you get access to a wide range of assessment and evaluation, things like what are some of the top stocks based on growth stocks or stocks by quant or stocks by their dividend payments. All these access are things that you can get your hands through the stock premium access that you get through Seeking Alpha. But here we're first going to be looking at the SAP web kind of stock assessment in the past 1 year. As you notice, the stock is down by close to 45%. Year to date, the stock is also down by almost 43%, just quite a poor performance. But if you look at it long term, like in terms of the past 5 year, you're seeing it, the stock is down by 26%. But if you look at it a little bit longer time horizon, how about the 10 years? Let's see. Here you're seeing a positive return of 12%. May not be the greatest return over the span of 10 years. But again, timing sometimes plays a part. It also depends when you bought the stock. If you go back a little bit longer term, let's say as far back as going to 1998, the stock since then is up by close to 52%. That's approximately for the past 24 years. It does pay a dividend, as pointed out and alluded to earlier on as well. From an analyst estimation, based on the Seeking Alpha authors, the stock is getting a buy rating. Based on Wall Street analysts, it's getting a buy rating, but based on quant rating, which is an algorithm used by Seeking Alpha, they are getting a hold rating there. If you look at some of the estimates for the stock as well, in terms of their revenue estimates, based on Seeking Alpha, for December, the year ending in December 2022, they are estimated to have a revenue of 30.23 billion, and for the following year, ending in December of 2023, they're estimated to have $32.43 billion. All of that then to move on to assessments on Simply Wall Street, whereby we are going to take a look at some of the valuation metrics here and see if this stock is kind of getting positive scores here. The first thing you notice that from a price to earnings ratio compared to its own peers is definitely getting a pass, and also compared to the industry and its own fair valuation. It's definitely also showing to be below its fair valuation. Let's start up with comparison of the price to earnings ratio for SAP and then compare it to its own peers. For SAP itself, we are saying, and this is based on the SAP traded on the New York Stock Exchange, showing a PE of around 24. And if you compare that to that of Adobe, which it has much higher price to earnings ratio of 27.6. Next, we are comparing to Roper Technologies with a PE ratio of 39.4 compared to Synopsys, which is at 44.9, and even more Intuit is at 53.8. So it has the lowest price to earnings ratio in comparison to some of its major peers. If you look at it and then compare it to their own fair valuation for the stock based on its internal valuation and the future cash flow models using a discounted cash flow is showing to be at $239.24. In other words, according to that calculation, the stock is undervalued by about 67%. Next, we're going to take a look at analysts and how they are projecting the stock price in the next 1 year. Analysts have a consensus with an average price of $121.25. And given the last trading price for this stock, it would show an upside of close to 53%. And if you look at analysts on Yahoo Finance, they are also a little bit more bullish with a 1-year price target of $126.51, surpassing that 53% upside for this stock. There you have it, folks. A quick look into the SAP stock and its analysis in terms of its price target, in terms of its fair valuation, and how the stock performs in the past 1 year and longer time horizons. We also looked at the number of financial metrics to assess where this stock is at from a fundamental perspective, whether it could be an option for investors. Well, you notice that historically over the past 5, 10, or even longer term, the stock has not been the greatest performing in terms of stock price valuation, in terms of stock appreciation. It has done well in some time periods, particularly if you kind of took advantage of some of the short-term declines of the stock. Let's say if you bought it when currently it's down by about 40%, assuming the stock performs as it has in the past, it has been able to kind of recover from these heavy declines. But again, in the stock market, the past is not necessarily guaranteed for future. It's so important for investors to do their own research and decide what their investment thesis is, and are they do they believe actually in the stock and for the long term, and do they think this would be a sound and wise investment for long term? We do not encourage investors to buy stocks for any short term gains, because it's going to be quite volatile, and there's always this strong risk of potentially losing your investment. So that's something that you have to be comfortable with, and do your own research before buying stocks or shares of SAP or any other stock for that matter. This video definitely is for entertainment purposes, and we wanted to show how we go about assessing the stock and analyzing it for our own purposes. I hope you found this video beneficial and gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, penny stocks. We also talk about investing in crypto and ways to reach financial independence, financial freedom. Thank you, and I hope to see you next time.